Good evening, everyone, and thank you for joining in. We are here today to discuss the topic of accredited investors, who they are, how do they impact us, and also try and understand a global perspective to this subject, which is relatively new for India. So as most of you are aware, SEBI came up with a consultation paper in end of February to which they published and have asked for comments by 18th of March on that regulation. And that's the backdrop with which Arya and FPSB and Rajesh started chatting possibly about a week, 10 days ago, and we were debating how to go about this. And then, like everything else, this happens quickly in a rush, and we've suddenly, here and live. So thanks, Rajesh, for getting this organized at pretty much short notice and getting also Honmeng part of this panel. Uh, I must welcome you both on behalf of ARIA as well as FPSB India. Luckily, I happen to be members in both organizations, so I think I can take the liberty of doing that. And for today's session, as you are aware, we have two panelists. Uh, since I do know Rajesh from a pretty long time, um, I thought it might be best for me to introduce him and then him to introduce Onmeng before passing the floor back to me. Rajesh, as most of you know, is now the country head for FPSB India, really spearheading the learning objectives. And pretty much, I think Rajesh has been a person who has tried to and does understand investors as well as a lot of intermediaries with his previous role in IFAST for possibly a decade, if I'm not mistaken, and then a couple of financial institutions like Fidelity and ICICI as well. So thank you, Rajesh, for organizing this, and I'll pass the floor back on to you to introduce Han Meng, whom you know far, far better than I do, and I'm hoping this 1.5 hours will allow me to know him also well.
Sure, sure, Loai. I mean, always a pleasure. Amazing to get back with conversations here with our friends in India. And I must say that, it's also like a very happy moment for me because this is like the first webinar that FPSB India liaison office is organizing. And I'm glad that, we are having financial planners and the group headed by Arya supporting us for this. And much more, in a way, much more happiness comes in when you have Honmeng with you because, I got to meet Honmeng back in 2008. And that was when I was contemplating joining IFAST from Fidelity. And when I met Honmeng, I could probably just share that I thought I was meeting a monk, somebody who was like talking a lot of worldly wisdom, somebody who actually cared a lot about investors. And he himself has written a few books, a couple of which I have forced him to autograph and give it to me from his bookshelf, saying that, which talks a lot about what he believes. And Honmeng, I would also go on to the extent of saying that most people, what they haven't heard of him, is also very active on the on certain aspects of life, which is beyond health, which is wealth, which is health. He's also been on the board of one of the cancer foundations for the government of Singapore, and he has also been, in a way, beyond just the co-founder of IFAST, being part of a lot of communication that the Singapore market has seen thanks to him, and other markets like Hong Kong, Malaysia, and now China. So I would say he's one person who always tries to simplify things and try to make people understand what is it, in front of you when it seems complex. So I've also been very grateful to have him as my boss for some part of my journey in iFast, and then a coach or a mentor to me as well through all these years. So it's a great feeling to have friends and somebody so close to you on a panel, and we are all trying to uncover something new in India together. So thank you, Loai, for giving me that opportunity to introduce Hornming to the larger audience. Thank you.
Thank you, Rajesh, for that very generous introduction. Thank you.
Thanks so much, Rajesh. I think before we sort of deep dive into the subject, it might be appropriate to just look at the key aspects of the consultation paper. And just to explain to people who are on this call that what SEBI has done is that they want to create this class of investors who have an understanding of various financial products and risks and returns associated with them. And as they say, are therefore able to take informed decisions regarding their investments. So this is the background with which they have introduced this consultation paper. And they go on to say that based on markets and their experience overseas, the fact that these investors have the financial capacity to withstand risk and what they mention on the first page of the consultation paper, but then there is no further mention of it, is that it enables them to hire expert managers or advisors as required. So on one side, they do say that these people are sort of at a stage where they can afford advisors, but subsequently in the regulation, there's no mention of that these people have to be advised. It's just saying that because they are larger, they can pretty much take decisions on their own. And what they've said is for this set of people, they can take one of two benefits. One is that they might escape the regulatory requirements that are essential for other investors on one side, or the second side is that the financial minimums that are required to make investments in certain products, these accredited investors could be exempt from. So I'll pause there. There are other aspects also, I think, of the consultation paper which need to be discussed and gone through. But let me start off with Rajesh. From your standpoint, when you read this, what are the top few things that come to your mind, and what do you think really needs addressing at the moment?
So this is quite interesting, Loai, for India, because this is a time when many things are converging in our market. On one side, we have a fair amount of market movement, be it in fixed income or be it in the equity side. And there is also this wavering around, whether the economy will kickstart, would it not? Would we be able to keep pace? And then suddenly you have this which comes in and says, you can create structured products. You can, manufacturers can come forward, create structured products. You could have customers who are not bound by a certain minimum to even subscribe to it. I feel overall, my first take was that there is a lot for intermediation to do here. In whatever form you look at it, true blue financial planners have a lot to do, because then there would be questions coming in from their clients. Even those who are into pure distribution would also need to be extremely cautious about dealing with such accredited investors as and when they take shape in India, because then from a customer point of view, that orientation around how do you keep the customer safe should something not be right with the product structure has to be even more on the high alert so far as the mind share is concerned. That was my quick takeaway. when I looked at what was given. And maybe we can discuss more later.
Sure. Thanks, Rajesh, for that. Honmeng, your sort of first thoughts when I know that you may have quickly glanced through some of the pieces of the consultation paper that has been rolled out. At first sort of glance and keeping in mind that, you are involved with iFast India, so I'm sure you're aware about, what some of the Indian intermediaries are facing. What are your quick thoughts on this regulation?
Yeah, I thought that there could be more details so that we could have a clearer picture as to the intentions of the regulators in contemplating this. Yeah, hopefully, I mean, hopefully it is a positive development in the sense that the intent is to make a lot more products available to those who qualify to be AIs, as opposed to looking at the existing products and then drawing a line and then limiting some to AI and the rest to retail. That would be a negative development, I feel, because that would restrict the number of products available to retail in India. Later, I'm actually happy to share how some of the jurisdictions that we operate in, Singapore, Malaysia, and Hong Kong, how those countries think about AI, and hopefully some of that thinking may be replicated in India as well.
Sure. Yeah, I'm sure we will certainly get an opportunity to hear that from you. So if I sort of start off with the pieces in the consultation paper, the first piece talks about the eligibility criteria. I just want to get like quick views from you on each of the components rather than us sort of discussing things at a 10,000 feet level. Just in case people who are attending haven't read through in detail the consultation paper, this might help them from that perspective. So the first thing that they speak about is eligibility. And here they have said that, there are three criteria that they have put down for individuals, HUFs, and family trusts. They've said that if somebody has an annual income above 2 crore of rupees, which possibly means on Meng about $250,000 US, or they have a net worth which is in excess of $1 million or 7.5 crores. But in that net worth, they should have at least half of that as financial assets. So that's the second criteria. And there's a third criteria saying in case you don't meet the annual income limit of that $250,000 or 2 crores, then you could have 1 crore plus of net worth, 1 crore plus of income. But in that case, you must also have net worth of at least 5 crores with not less than 2.5 crores in financial assets. So that's what they've said for individuals, HUFs, and family trusts. And I'm guessing most of us in the audience today are more concerned with this category. For body corporate, they've just said net worth above 50 crore of rupees, and for trusts other than family trusts, AUM of greater than 50 crores. So I'll pay less attention to that and focus more on the individuals, HUFs, and family trusts. So again, Rajesh, your thoughts on that criteria?
I was trying to look at the criteria and ask myself, what could be a rationale to give if we thought, the criteria should not be 2.5 crores, but it should be 3 crores on financial assets. Or if the criteria was not 2 crores of net worth, but 5 crores of net worth. Is there any science that we can apply to defining this criteria? But having said that, there has to be some kind of a starting point, and then you kind of evolve it as we start seeing how things shape up in the country. So there has to be some kind of starting point. So I'd see this more as a starting point rather than a definitive criteria, is my first take. So having said that, am I fully convinced that this is the only criteria that we should apply? There I have a slightly different view. The view there is that why should the criteria only be linked to wealth? I mean, again, going back at the 50,000 feet and asking this question, is the criteria necessarily to be linked only with wealth, net worth, free cash flows, or financial assets? Or should we be looking at linking this criteria with the understanding of the product? Partly with, yes, you have money, but also somewhere connecting the risks of those individual investors, the risk profile of those individual investors into this criteria. Because I can't fathom, investors with extremely low risk appetite, even with this kind of money, how would they kind of, end up getting into structures which may be purely meant for accredited investors? So the larger question I was trying to ask was, okay, if we need to start somewhere and there is a number, then is there a qualitative element which connects with the risk profile of this customer that can be brought in? And the other part is that should there be such criteria, is there a necessity for them to either be evaluated on their understanding of what they are subscribing? Because, this is very much like customer beware, versus saying that if you do not understand this, then compulsorily you have to take the help of either a financial planner for fees, or you take the help of an a product, distributor who would also give you, in best interest, some more insights on what this product is. So somewhere I'm trying to understand, how can we tackle this softer element of not bringing in the monetary, but the non-monetary aspect. And I don't know, maybe Honmeng could be able to chip in on any of the other countries which tried something beyond just monetary, which.
Yeah, so Honmeng, before you get into that, I just thought I'll also read out for NRIs and foreign entities, they've prescribed these same limits in US dollars. So that might give us a little more reference to context, and you can use that and also suggest if there was any other methodology. So for NRIs and foreign entities permitted to invest in India, they have said, again, similar, the three categories: annual income above 300,000 US, or net worth greater than 1 million with not less than 500,000 in financial assets, and annual income greater than $150,000 plus the net worth being in excess of $750,000 with not less than $375,000 in financial assets. I think broadly they've taken the current exchange rate and put the same figures for Indians as well as non-residents at the moment. But yeah, if you can comment on that, as well as, as Rajesh asked, and that's a question which comes to my mind too, that there are many investors with larger wealth to understand managing their money far lesser than people who might be just starting off. So, is there a qualitative criteria that we can bring in, and is there some experience that we have from the global market?
Right. The quantitative criteria is actually very similar to many countries in the world, including the US and Singapore and Hong Kong and Malaysia as well. I think mainly because it's very easy to set the criteria. So it's generally around net worth financial assets. So they make a distinction between net worth and financial assets because some people have a very expensive house, but they don't really have a lot of liquid assets. So they could say financial assets are excluding the property that you own. And the other is annual income. So I think how most regulators draw the line is really they look at their country and then they see the number of people who would meet this criteria, so they draw a line. And I don't know where they draw the line, but I'm guessing it's probably around the 20% mark, so that let's say there's 20% that would qualify as AI. And then that would be a certain number that they may be comfortable with, and then so once you draw the line, the qualitative criteria is actually applied to the people below the line, meaning the retail investors are the ones who actually have more rules in that. If they, we have to be more concerned about their risk profile and their understanding of the investment. So there are regulations in many countries that say that for these retail investors, you have to do the work of really giving a proper financial, well, really first understanding what their situation is, and then recommending a financial plan that suits their needs. Above the line, so if you're AI, there's actually less protection. That means all the regulations that require the licensed financial investment advisor to do a proper fact find and create a proper financial plan actually don't apply to AI. So the attitude is that if you're AI, you have a lot of money, you can afford to lose a part of this money, and we want to make a lot of products that we don't regulate available to you because you're sophisticated, but then you are well off enough to understand that there are all these risks, and you have to then manage it yourself. There is less protection offered to you, so you can't you can't claim that someone that sells you the product hasn't fully explained the product. Of course, I mean, there's still it still doesn't protect the distributor from negligent service, but the burden actually falls on the AI a lot more. That if you're AI, you don't expect us to protect you so much.
Yeah, in fact, the other component of this consultation paper, which I want your thoughts on Meng, and not to understand what happens in these countries where you've had experience, Malaysia, Hong Kong, Singapore, is that they are talking about then having a process of accreditation. And there will be an agency, which could be the stock exchange or some institution or a subsidiary, which you need to make an application to, and then you'll be certified that, oh, you are accredited. And interestingly, that validity is for 1 year. So every year you have to go and renew this certificate. Is that something that is done there? And otherwise, how do you recognize somebody as AI, and when do they move out from not being AI?
Yeah, so it's in Singapore and Hong Kong, we actually do require documentary proof. If you say you're AI, you do need to submit your bank statement or a statement from your accountant to show that you do have. So it's not really a centralized body where you would be certified. It could be as long as it's evidence, sufficient evidence, and the financial institution that you're dealing with actually makes the judgment in terms of whether it's sufficient evidence to then admit you as an AI. And there is a time limit. We do require the AI to update their information every year. In Malaysia, though, it's just a declaration from the person, from the client, to say that he is an AI, and no documentary proof is required. So there are different approaches. Actually, Singapore started with a regime where we didn't require documentary proof. So it was only about 10 years ago that the regulators decided that we do need proof that you're an AI, because I think the world of products that the AIs have access to just exploded in terms of quantity, and so the regulators just want to be sure that you are in fact an AI before giving you access.
So that leads me to one more question. That you said that there was no requirement of a certification um, and proof, right? And then they required it again. Were there situations where, or cases which resulted in AIs, being either missold, misled, some situation which caused this sort of clampdown that came in?
I'm not aware of any such cases. Usually, the stories that make it to the newspapers involve very rich people with clearly AIs. They're not hovering around that line. I think that some of these products are really quite interesting. So there may be some temptation for retail investors to want to declare themselves as AI in order to have access to these products. For example, the IPO of some stocks, there is a period that is only available to AI before it's open to the retail public. And so the AIs can possibly have a bigger bite of an IPO than the retail investor. So there are some situations where the retail investors do complain about their inability to buy certain products, and then so there is a temptation for them to just declare themselves as AI. And but I think the thinking really is that if we have a regulation like that, then there should be some kind of a proof that's required, so that the regulation is meaningful. If not, if it's just completely based on self-declaration, it is it does make there's less bite to this AI regulation.
Interesting. Rajesh, you have views on this as well as any experiences or data from other countries?
Well, so there has been a very interesting set of exchanges that FPSB has had with IOSCO back in 2012 on this matter. And largely at that point in time, the conversations were revolving around suitability requirements with respect to the distribution of complex financial products. That was the context of the discussions. And to a large extent, when it came to distribution of complex financial products, there were two aspects to it. One is, who can buy them and who cannot buy them. So, both have to be clearly mentioned. Now, a perspective that I wanted to throw was slightly different. When you have certain products that are meant for accredited investors, there is also a unstated psychological play on the minds of those who are not AIs, that most of the risky and most of this structured products have moved to the zone of AIs, and so probably I am subscribing to those that are not as complicated or as risky. That's also, as the days, as the years progress, that's also a perspective that can fall into the minds of investors. So there is also this, that element, that I wanted to bring in as to how do we continue to say that retail, because retail is still going to be the one that needs the safeguard. At the end of the day, if you really look at it, the simple view that most people would share is that a really, really sophisticated person would know what to do or how to take care of his own money or her own money. But this whole thing around retail is something that keeps worrying, not just regulators, but also people at large. And so I think that is an element that we should bring into our consultations with both the regulators and the market participants. Because at this point in time, the way I see it is, it's an interesting opportunity for us as India to show that, by proper handholding, either by distributors of financial products or by full-fledged financial planners who are, registered with the regulator, either which ways you look at it, the customer is still being protected. If that can be achieved, then these things can find balance as we move forward. Maybe some criteria might change, some products might flip from here to there, but largely this concept can prevail and it can be helpful. But if it doesn't get achieved, then, I just, because we were talking about different territories, so one of the easiest territories that I can find information about is call up my sister who lives in Australia. And she told me that there was a particular group in Australia which went down, and their product was listed as an accredited investors product. And it was part of their global, invitation and investment oriented visa program. So look at the other aspects of, being an AI. So you would have different countries who would say, plonk in some money into my country on this product, and I'll give you, visa as an investor. And a lot of Indians also will aspire to go there and, pick up a residential status by virtue of investments, for example. Now, in this particular example, I'm not naming the company, but it's very easily available on the internet. This particular company sold its accredited investor defined product in other territories. And a lot of them who bought this product were actually AIs from China, accredited investors from China. Now, the story goes on that the whole group, which had a lot of other interests, the whole group was, obviously not being true to the investors, true to the global investors and the global public who had put money into their products. It was difficult to find them. Millions of dollars were lost in that. Bulk of the money belonged to people who did not understand English. So the other nuance is that being an accredited investor with money is fine, but what if the product is in a language that you did not understand? You're supposed to sign off on a lot of documents, and which is evidence enough that you have signed and understood. But most people, when they lost money, and legal consultants and people were trying to reach them to say that, we will file class action suits against this company. We'll try to get your money back from this group. Let us approach. They themselves have come on record saying that, lawyers have come on record saying that bulk of the accredited investors could not even speak proper English. And they were buying products and they were trying to seek residential status in Australia. So this is a real life case, not so very old in our history, can easily be found. Now, when you look at this, what is the other angle that comes out? The other angle that comes out is India is a country that has the world's largest language diversity. On the language diversity index, we are at 91, if I'm not mistaken. And that is pretty much the top ranking in I've heard Hornmeng telling me every 200 kilometers, I think I'm in a new country when he keeps traveling from one state to another. So now look at it from a language perspective. What happens to our accredited investors if they don't understand the language in which the product is being created and sold? Is that not a caveat that we should bring in? If we have to learn from other countries, then is that a caveat that we can bring in? And how can we therefore protect? So I'm just sharing. Back to you.
Yeah, I think very interesting. Before I continue, I just have to make an announcement for all those who are CFPs and who are seeking, the CPD points. And if you have not registered, then on that YouTube chat, if you can just post your name and FPSB number, FPSB is going to make sure that you get the relevant points. I thought that this is something that by now everyone who has to be here is here. Rajesh, that was a thought that came to my mind when you were starting to explain the Australian story that, in India, a fair amount of wealth is not necessarily sitting in the metros. I mean, we will assume that people in the metros will understand English. which also may not be true, but at the same time, let's assume that for a larger chunk of such urban tier one city population, they might understand. The tier two, tier three, where there could be wealth, uh, and as you also mentioned and Onmeng mentioned, sometimes it is, oh, I want to get over the line into AI so that I can participate in a complex product which has the promise of the earth and the moon and the stars and everything. Otherwise, I'll not get that opportunity. I think that is going to be a very, very crucial factor to be considered, because in the utilization of the concept, what SEBI has mentioned is about the same thing, saying access to products and services offered exclusively to AIs. So that, I think, is going to be a very, very important factor for us to keep in mind. And just to understand from Honmeng and then later from Rajesh, what are types of products which could come up as exclusive. So when you mentioned also, Honmeng, that there was a big sort of boost in terms of the AI products, and that's why the regulation came in Singapore of asking them to be certified or provide evidence before they can be considered AI. What type of products? What has worked? Where do you see the whole market, say, moving 5 years, 10 years from here in India if this regulation came in now?
So maybe I just follow on Rajesh's point on the qualitative criteria. So in Singapore, you draw a line, and then if you're AI, then you're pretty much free to do anything you want. But below that line, if you're retail investors, there's actually in order to be eligible to even open an account and trade in financial securities, the burden is on the financial institutions to establish a few things about the client. We call it customer knowledge assessment, CKA, right? So that's actually what the regulations call it. And we actually have to establish whether the client has really three dimensions. Whether the client has prior experience, and prior experience is defined as having transacted 6 times in the similar security over the last 3 years. Whether the client is educated, so if the client has a degree in business or finance, that will qualify. And the third is work experience, whether the client has worked in the finance industry or related industries before. And if we're and then so that there is a set of qualitative criteria that we have to assess the client on. And then if the client fails on these points, we actually have to give the clients advice. And the clients can reject that, and then they must sign off on a bunch of forms to say that they have been given advice, they reject it, and they want to transact their own way. So those are the hoops that retail investors have to jump through in order to even transact it. We're talking about things like stocks and mutual funds. Not even the fancy products. Just to be able to buy a blue chip stock or just a global equity mutual fund, you have to jump through those hoops. And then having so now because I think we may come back to this, so that's why I thought I just to share that following on what Rajesh was saying. And then, so now to answer your question, so if we just look at mutual funds, for example, anything that's plain vanilla, the retail investors have to go through CKA, and then they'll be able to buy them. But any mutual funds that contain derivatives, those would be considered complex products, and they would be available only to AI. So most of these would be hedge funds. Another example would be there are only about 200 AMCs in Singapore who are who have really who are qualified to issue retail mutual funds. That involves a much higher capital requirement, and a whole. It's a set of a pretty high criteria that the AMC has to meet to show commitment that they are really interested in serving the Singaporean client. But then, so that there are about 200 of them. But then I think there are thousands of fund managers who are operating in Singapore who don't carry the full retail license. So these some of them have offices here, some of them operate from overseas. So these AMCs would target specifically AI because there's no protection. So these AMCs, they could be managing plain vanilla products. So it's just that they don't carry a retail license, or they could be selling very complex products full of derivatives and futures and fancy management strategies. So it's a very broad spectrum that the AIs would have access to. Over to you, Rajesh.
Yes, I think we do have Luwai. Yes, Luwai.
Oh, I can. Okay, so I just carry on with the answer then. Then that's mutual funds. But then if you talk about securities, then other types of products, there would be some managed portfolio service, or that could be trading in exchange and futures, which if you use, in this case, it's actually not the regulations, but certain banks offer their, they have a special service, whether it's in terms of the strategies they use, or whether they have a fancy black box that promises a certain outcome. Certain banks actually create a sense of, they try to differentiate themselves by offering these services only to AI. So those products would also be unavailable to the retail investor.
So from what you mentioned on Meng, and if I take what Rajesh had mentioned earlier, and you've mentioned about the awareness about, from the investor point of view of understanding products. One is that having the money or meeting the net worth criteria, and the other is I also understand. I'm thinking that, the way forward could possibly mean, okay, if I have the money and I understand, I can go direct. But if I have the money and don't understand, I should go advised. Is that something, Rajesh, you subscribe to, or you think that could be workable?
Well, interesting twist there, Luwai. But yes, to some extent, what I was just trying to allude to was that there are two risks to this. Sometimes you need to make certain people remain as so let's, for the sake of this conversation, say that everybody who is not an accredited investor is the retail investor. Large bifurcation, institutional separate, but from a financial planning individual point of view, if he is not accredited, then we treat him as a retail investor. And retail investors include maybe those wealthy HNIs, maybe those who can afford to buy an AIF and things like that, but they need not necessarily be an accredited investor. Now, the risk that we would foresee in any country is if a retail investor is on the border of this, right? There is a risk that that retail investor may have from a point of view that flipping into AI means he is himself sacrificing a lot of protection that otherwise the regulation would offer him or her. And if he or she remains a retail, then maybe he forgoes the opportunity to pick that product, and the product may be very enticing, whatever it may be. So while not discussing specific about the product, because Honmeng did touch upon it, what I was trying to share was that we have a larger responsibility as a financial intermediation, fraternity, be it financial planners or even product distributors, that at no point should we end up having a situation where a retail who is, who needs that hand holding should be categorized to that extent just because there is a checklist compliance. That's what I'm trying to say. And the more we can try to practice this in the market, the better it would be from an ongoing point of view. That's number one. Number two, like I mentioned before, having money need not necessarily mean you are ready for complexity. Having money also doesn't necessarily mean that you understand. So if I go to the 3 dimensions that Honmeng spoke about in customer knowledge assessment, he says there is a dimension of investment experience, there is a dimension of work-related experience, and there is a dimension of education. So everything revolving around the knowledge of something that you probably would catch if you had a combination of this. Now, I've also come across, at that point in time when we were looking at CK assessments, even as a platform, we used to keep hearing that customers feel, I have the money, why should I even waste time answering questions? Who are you to ask me questions? These kind of pushbacks also come from a consumer's point of view, a customer's point of view. So then, in the middle are all of us who are trying to therefore say that, you need to do this for your own good interest. And that's a consistent messaging that would be needed. And to the extent where, somewhere we should also agree that, I don't know, this maybe it's a little overrated concept of direct investments. There might be direct plans, there might be no commission products. But somewhere I think we are also equating no commission or no remuneration product to do it yourself. I'm not saying you as a moderator, but I'm saying we are all as a country. Look at some of the statistics that come out from different industries that talk about such products. The statistics also have certain things that can give an understanding of, is it really, do-it-yourself drivers? Or are there people who are guiding them, taking them in this journey, even though the product may not be paying a commission? So I think to come back into this very important question around retail being pushed to the other side of the fence is a risk that I think we should never carry as a country. And that responsibility somewhere lies with both the manufacturer of such products, because they are the ones who define, okay, checklist of SEBI, this is what AI is, check, are you ready? On the other side, there would be people who carry this to the investor. He might check, but, is it truly reflective of the check boxes is something that we have to consciously keep asking. And there, I think, I just look at it in a slightly different way. Introduction of accredited investors, in a way, I feel boosts intermediation in all forms. And it's also an opportunity to stand out from the crowd and become, a true, a custodian or a torchbearer for the customer, for the end client.
Yeah, and I think one of the things that I have had as a pet theory has been that, complex product require complex advisors. Not only require complex investors. What this regulation is seeming to cover is, complicated products because they are of a certain value or, structure, etc. And here is an investor who is
lost Loai for a short while. So I think I'll just
Yeah.
carry on until he comes. He was saying complex products require complex advisors. Hanwing, you have something there?
No, I just
I dropped off. Go ahead, Only.
oh no, I mean although there's less protection offered to the AI, but still the institution that's serving the AI still are bound by certain rules. I mentioned that they cannot provide negligent service. So if the AI goes to his private bank and says, look, I totally don't understand investments at all, and you need to do a full financial assessment of what I need, and give me, I'm asking for financial advice. The bank cannot say, oh, but your AI, we don't do that for AI. So if the client asks for it and the bank doesn't provide it, there is a case for the client to, and if something goes wrong afterwards, there is a case for the client to take the bank to court. That has actually happened a few times where very rich clients have claimed that they did not fully understand the product and the service that was sold to them by the private banks. And often these are settled out of court, so we don't really get a sense of how the judges will rule. But I think generally for jurisdictions that are very serious about being known to be financial centers, the licensed advisors must be held to the same regard as other professionals, such as doctors and architects. And you can't just say to a patient, well, you know a little bit about medicine, so you just tell me what you want, and I'll just give it to you. So that would be negligent, and the patient the patient can't insist that he wants a certain medicine if the doctor knows that the medicine is not right for the patient. So there is still some burden on the financial institution providing the service to the AI.
Loai, we just took over your,
Yeah. I've been in and out. I'm sorry, but power is situation is a little bad. Yeah, I got most of it because I was connecting back on my phone, so I did hear what Onmeng was mentioning. Yeah, so I think Onmeng, you also had a slide in which you had demonstrated or separated out what was various rules which you wanted to share. It may be a good idea to put that out, because one of the questions somebody has asked is what are the specific products that are going to be available for AI? And I think it's very early days right now. This is just a consultation paper. There's no regulation at the moment. But maybe when Onmeng shares that, he can also talk about some specific products. People are very keen to know what will be so unique of these products to AI.
Okay, I'll just share my screen. I tried to put everything onto one slide, so it's quite high level. Okay, so here, customer qualification or customer eligibility in Singapore, Hong Kong, Malaysia. The nomenclature is different in different countries. So we call them AIs in Singapore, but they're known as PIs, professional investors in Hong Kong, and qualified investors in Malaysia. Documentary evidence is required in Singapore and Hong Kong, but not in Malaysia. So this next line is what are the kind of products. A lot of hedge funds, because the hedge funds use derivatives and to a large degree. Okay, so if the hedge funds use derivatives only to do simple currency hedging, that could still be approved for retail. But if they use it to a higher degree, and if they have all these hedge fund strategies where they're able to long and short, that would be excluded from retail. Restricted is what I described just now. The AMC is not licensed to offer retail products. There may be there are thousands and thousands of such fund managers in Singapore, and they're offering their service only to AI. So here, I mean, we used to say that if someone like Warren Buffett comes to Singapore and he refuses to go through the hassle of getting a full retail license, he can only sell his service to AIs then. So then, of course, then the retail investors would be locked out of being able to have their money managed by someone like that. But that's how the regulation would be. So if it's just that the AMC either doesn't qualify for the retail license, or they come into the market not intending to get the full retail license and just want to serve the high net worth clients. There are a lot of non-registered products. So even if an AMC has a full retail license, they may bring in their products from overseas and not register these products. So they wouldn't be registered for retail. So they would have a few that targets retail, and then a few of these, or rather a lot of these non-registered products that they would make available only to AI. And the bonds in Singapore and Malaysia are mostly available to AI unless they qualify for retail. So bonds are mostly for AI unless they qualify for retail. So they have to go do a bit more work under this seasoning framework in order to qualify to sell to retail. So the bonds are in very high denominations. In Singapore, it's 250,000 per lot, and in Malaysia, a lot of these bonds trade in the millions of ringgit. So so generally, those are the big ideas, but I put in here the words possibility of total loss. So that could be the high level principle when the regulator thinks about whether a product is complex or not, whether to restrict it from retail or not, is whether the product can have that catastrophic loss where the investor loses everything. If it can have that outcome, then it will be an AI product. It won't be made available to retail. So here then, just below AIs in Singapore, it's those same criteria. It's just how much assets you have and what's your income. And I explained just now the CKA, that the education, work experience, and investment experience it's a further assessment that we apply to retail investors. So these are regulations that are set up to really ensure that that the protection is offered to the retail investors, which the AI would be excluded from.
Yeah, and I think the one other point that comes to mind is, of course, that this regulation right now, or the consultation paper, has been floated by SEBI. What happens to products which are outside SEBI's jurisdiction? Because one of the things, and that's another question that's coming up, saying, how are you going to define these complex products? And I've been thinking about this, saying, okay, maybe the complex product, as I think Han Meng has put up, saying, if there is a product in which I could lose all my money, could be one criteria. The other criteria could be that it has really long lock-in, and therefore I don't have an exit route once I get into the product, could be the second. And then you could define amounts and say, therefore, but the amount of money that I could lose because I'm putting a larger chunk even though potential loss, let's say, is 20% or 25%. But if I was doing 5 lakhs or if I was doing 5 crores, the impact is going to be much larger. These could be some criteria to define complexity. And then I'm thinking that an insurance product would automatically fall in, because once you are in, you're in, and otherwise you lose your money if you don't pay your second year or third, fourth, fifth year premium. Any thoughts on that, Rajesh?
I'll just
Well,
stop sharing my screen.
Sure.
Thanks, Arming. It took me to some memories. Thanks for sharing the slide. In fact, Lovai, a couple of things that came up as you were asking this question. The first is, if you look at the consultation paper, it also talks about allowing certain products to be given even without ticking off the minimum requirement.
Right.
Right. So, which means somewhere it's also going to be like, an interesting opportunity for multiple product providers to take a share of wallet from a customer, even if, he says, although say, for example, my AIF minimum is 1 crore, you can pick up my AIF for 10 lakhs and experience me. Right. That is what it indicates, right?
Right.
Same applies to a PMS, right? So, which means that then for a PMS, instead of 50 lakhs, they can say, put 5 lakhs and experience my my portfolio management. And if you like it, build on my product, because then I'm giving you great experience. Now, think positively, that's a great thing. But look at it from another point of view. I just read a joke that if you had 43 or 45 stocks in your portfolio, then you don't call that a portfolio, you call it a mutual fund.
Yes.
Direct investors going and picking up 45 stocks or 30 stocks or whatever, then you are running a fund yourself for yourself, right? So then there is that element, as to are we then going to be looking at our own customers being surrounded by different enticements, inducements to explore, try me out, because everybody has a fair chance to then go out and say, try me out, which makes the situation even more interesting, because then traditionally what I feel is that if our practices have been connected to the retail side of it, then suddenly the AIs will also start seeing that, I need somebody to help, because this is now becoming what I thought would be a great stock selection and, very thorough research and a good portfolio to hold for me, for my kids, my grandchildren, suddenly starts appearing to me that I'm running a mutual fund myself, right? So that could be a possible situation with AI products as well. And if you see some of the questions that are now coming up on screen, a lot of interest is building up on what could be those products, right? So which means the products do catch the imagination of us as well, as to what could those be and how would they come out. To add to it, what if you connect language to the product, then the other principle that we should probably get all product providers to agree to is that, maybe they structure their language that it is understood very easily by everybody involved. I mean, if you have a taxonomy for the so-called, product definition, creation, and communication, then it just means that, like how today we have maybe 20,000 different mobile phones, which are very, very expensive to pick up. But you still have certain things that you can compare and you can say, okay, this one and that one, and does it work for me, right? But that taxonomy has to be defined. Is it the RAM? Is it the screen? Is it scratch proof? Is it battery? Whatever, cameras. We understand all of this now, right? So similarly, if we develop that, then probably what we are getting towards is some kind of clarity for us also to convince our customers that this is how I see it. And if you have doubts, please go through. And last but not the least, I think this whole chain of communication also should be in a way compliant, in the sense it can't just be thrown out as a leaflet, just like that. I mean, there has to be some kind of an identification for such communication. So if we kind of, try and work on these lines, I think maybe there is an opportunity to also use it for the right reasons. That's the way I look at it.
Rajesh, I have a very different view on this. Put 10 lakhs and test it out. I don't think that that's going to really be a good example. So, I mean, I hope the product manufacturers don't go down that path. Because I suppose that for the AI also, I'm just thinking if I was a product manufacturer, I want to create some exclusivity and say this is only for you, and I'm doing this only for this one category of investor, and you fall in this elite, right? So I think that's an important piece that we have to look at. There is another question about the cutoff. I think Honmeng mentioned that 20% of investors typically in most of these countries will qualify as AIs, and the rest will be below the 20% mark and therefore retail. The question is that the way it is defined, that it's unlikely the percentage of AIs will be very low. Even it's not clear how many will bother to register as AI. I don't know whether Honmeng can answer this question, because I think it's a little vague at the moment because it's still a consultation paper and not regulation. But Honmeng, you want to take a shot?
Yeah, I don't know if it's 20%. It was just an example that I gave, but I imagine that the regulators would have done their numbers. They look across the entire population and say, if we draw the line here, then okay, so many people would qualify as AI and the rest would be retail. So I think they would want to look at some meaningful number, at least 10%. But I mean, also, because if AI is really restricted to 2% of the population, then it's maybe not that meaningful, I feel. But I think different countries may approach this differently, or they may start with it being just a small part of the population, and then over time increase it, relax the criteria in order to allow more people to cross the line. So yeah, so it's just how I think the regulators are approaching it, but I don't. 20% is not a factual number; it's just an example.
Okay, glad you clarified, because even in my mind it was, oh, that's 20%. So, so there's another question about whether we are contemplating whether products like PMS, AIF, pure equities, derivatives are going out of reach of normal advisors and investors. So, Rajesh, you want to take that?
Sure, Loy. I think that should be coming in from an existing practitioner, because then the obvious question is, would I be able to plug in some of these products if they are categorized as for AIs? I think the way I see it is that, say, if we have an AIF, like you just mentioned, an AIF may come out with an option for AIs, but the AIF per se may not just be devoid of access. You may not be devoid of access to that AIF. I don't think that is the way in which the regulation is being proposed. The second element to this would be that some of these that are written in the question are sophisticated strategies. I mean, a derivative strategy is sophisticated strategy. So then it also means that the care and diligence that we exercise today to propose anything like this, maybe in the context of, if some part of that product or maybe another variant of that product comes only for accredited investors, then maybe we have to be even more careful while we end up, recommending that segment of the product. Because, like I said, the protection that the law would have to customers on this accredited product might wean down, but which means that our defenses on behalf of the customer has to increase, which is the perspective I was wanting to bring in. So long answer short, don't think you retail or normal products will be out of bounds, but this might just add one more element for conversations with AIs.
Yeah, I think what Honmeng mentioned about, this being the initial criteria and subsequently there could be, tweaks around it, is, I think, I'm guessing and trying to guess the thinking of the regulator as well, saying that when I'm bringing in something new, I'll put in certain boundaries, and I know that over time I will learn from experience and be able to modify this as things go on. But on the product side, one question to Honmeng would be that, do you foresee that as a result of this, and let's say it sort of comes in as a regulation, and let's say global products are available only to AIs. And do you foresee that, and Rajesh, you could also take that, is that do we think that product manufacturers with such products, some global players, could actually come in and say, here, here's a good size of the market. Let me come in and offer this product, which is available only to AI, and get some money directly from India or investing overseas.
Yeah, so I shared in the beginning that I'm hopeful that what this regulations is about is that 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 it's a positive development in the sense that all the products that are available to retail today remain available to retail, and drawing that line of AIs means that a lot more products. The regulator could approve a lot more products to be made available to retail, but only, made available to the market, but only for AI. Okay, so that would be, I think, in the general direction of India really kind of evolving to be a financial marketplace, a financial center. The negative development would be if the regulator take the existing range of products and then draw a line and then said, oh, some of these products that were previously available to retail investors, I'm sorry, they are no longer available to you. So that would actually constrict and reduce the market. Let Rajesh take the rest of this.
So, Luai, I just wanted to add, to the previous question around products and the availability. Now, one of the things that even instances like we've seen during the Lehman crisis that has taught us is that even the most plain vanilla of products carries an endogenous risk that can wipe out portfolios. It's a plain vanilla product and still it can carry endogenous risk. So essentially, as the product complication increases, then there needs to be an eye of all of us in terms of, what is the extent of that endogenous risk that is embedded into this product. And therefore, I just wanted to mention that it's just giving us all the more reasons to do a lot more homework before we get speaking to our clients, should this come out. Yeah. Luai.
Sure. Are there more questions on? Yeah, I can see that. Yeah, there's a question about what would be the logic of lowering the minimum amounts. I think you've already covered that, Rajesh, but you want to re-emphasize that?
Yes, I think that is where, we got to be a lot more careful because, lowering of the minimum amount should not in a way push retail into, see, while there is a definition around who an accredited investor is, I had already in the earlier part of our conversations covered the possible risks around those, somewhere in the corner, sitting at the fence, who could flip this way, that way, when you checkbox purely on the wealth point of view. So I think very clearly retail should be devoid of such matters, because the whole concept is not to be used to bring complicated products into the space of retail. Basically, it is a mechanism where if you think that you don't need as much safeguards as you may otherwise want as a retail investor, and there is financial innovation, product engineering, you want to look at various esoteric stuff in the world, then it's up to you. It's your money. You want to do it, go do it. Product manufacturers, they will create, you buy. Now, customer beware, that's where it is. But that cannot flow, unfortunately, into retail. And that's really not the intent, nor I think would be the interest of the regulator. So very clearly, I don't know. Logically, it doesn't. Even you said that, Loai. I mean, logically, it just doesn't fit that customers would be offered lower number to subscribe. But then you never know. What kind of product is being structured and what's the minimum there. What if it's a 10 crore product for accredited investors or any investor at large, and they say the ticket sizes can start from 1 crore? I mean, I have no clue. The manufacturers might be able to throw more.
Like I said, I think the regulation can say whatever. I think the manufacturers will have to see that there is a business opportunity if they look at it that way. There's another question about, can buyer beware work today when, many of the products, the seller beware is missing. So what do you have to say for that?
Me?
Yes, Rajesh.
Okay.
This is India, so I don't think Onmeng might have a view on this.
I think so if we come back to the scope of our conversation today, it's accredited investors. And in the context of accredited investors, anywhere across the world, including what we just heard from Onmeng, it is very clear the buyer has to be aware of what he is buying. It is buyer beware, very clearly. Now, would that apply to retail? Retail has a lot of safeguards. So if you look at what safeguard is not available to accredited investors, that is what is already made available to retail investors. Are the safeguards working? Are certain products matching that safeguard? I think in the context of our conversation today is out of bounds, out of syllabus. But I think long answer short, very clearly, we have to look at, in the context of accredited investors, there are two things that we have to at least make sure our clients are made aware. Don't fall for the fad of being called an accredited investor. That's a very psychological, messaging and a conscious messaging that we'll have to give our clients. Don't fall for the fad. You may have your money, you may have all the wealth and the net worth, but do you really want to be there is a question you have to ask, because then we have to educate that the more you go in that direction, the lesser would be the protection that you would get as an investor. And to answer your question around, or to connect your question around international products coming into India, you should be all the more aware. Because there could be certain products that are meant for accredited investors where the territories where the products are based may give next to no protection for consumers or investors. So it throws a lot of avenues for conversation with our customers.
Yeah, and I'm thinking that the role of the regulator to educate accredited investor actually goes up a lot, saying, it's not necessarily only a privilege. There are, you are removing protection by jumping into this category of accredited investors. So I wonder how that will go. We'll wait for, it to roll on. There's a question which might actually be useful to get Onmeng's view on, which is that today most complex products like call, put options, futures are available to all investors, including retail. Should they be available only to AI? And what is your experience in the other countries? But before you answer that, I just think that it's not that everyone who invests in call, puts and futures, or say all retail investors are comfortable about call, puts and options and futures. There are a few who are good, and they might just make it based on knowledge criteria into the AI category. But Honmeng, are these sort of products treated as complex and therefore only available to accredited investors overseas?
Yeah, so that's a good question, because it is so there is a funny situation in Hong Kong where a retail investor can actually open an account with an options of with a stockbroker that offers options of futures and other derivatives, and trade in these products themselves without being AIs or without being any other ways qualified. So that's open to retail. But then if these retail investors wanted to buy a mutual fund that contain these derivatives, then they're not allowed to. They actually have to go and pass this test called a derivatives knowledge assessment, DKA, in order to be able to buy a mutual fund that contains these derivatives. So you think, so that's a bit odd, right? Because the retail investor can trade in these complex instruments directly themselves, and yet when they buy a mutual fund that has a professional manager managing it, they have to be pre-qualified. So that goes to the bigger question of how difficult it is to actually define what a complex product is in today's world, because in Singapore, Singaporeans trade or buy investment products from all over the world, because the Singapore market is very small. So of course, and then we buy a lot of things, a lot of these products from the US, and then when you just look at the listed ETFs, an ETF is supposed to be a safe product, but then there are all these very fancy ETFs that give you 3 times leverage, 5 times leverage, 7 times leverage, where you could possibly actually lose all your money, or these ETFs where you can use to short a certain industry or a certain set of stocks. So they are structured as ETFs and available to retail, but they actually have the ability to wipe you out all the money that you put in. So if you want to say, okay, retail investors, we allow you to invest in ETFs, but not ETFs that contain these things, if they contain so much of it, but if they contain less than that, we are okay. You know, so if you go down that line to try and define these things, it actually gets very complicated, and it actually creates a lot of work for the entire industry, because it needs documentary proof, it needs policing, and people who don't comply, you have to find ways to audit them and fine them. And so it's an entire regime that, when it's set up, is actually very onerous for everyone to manage. And then at the end of the day, whether you actually achieve the result of protecting the groups, or whether, you know, whether you achieve the results that you set out initially to achieve, it is you might find that it's quite challenging to think about.
Yeah, very true, Honmeng. And I just encourage those who are listening in, if there are any questions, please post them in the chat box so we could answer them. We have maybe about 5-6 minutes left yet for this webinar. So I think that's an important piece that you highlighted about the complexity of the product. And I'm thinking back and saying, okay, the reason for this consultation paper was, okay, let's segregate out some set of people and some set of products where, you know, the regulator really doesn't need to get into and control and manage and so forth, so that this set of people is the more informed lot. But now going through the questions and understanding what's been going around in the region suddenly makes me feel that, oh, you know, now we've opened up a Pandora's box and there's going to be a lot more complexity that's going to prevail, right? Rajesh, is that what you also think?
Actually, I had one more perspective to just throw in, Loai. Sometimes what happens
Sure.
is when we talk about clients, we forget ourselves as well. So I just thought I'll throw in this perspective. It's an interesting feedback that even we were part of one of the representations that we gave to the SEC. It's a public document, and later we can share it with all of our attendees. In this public document that we gave SEC, we actually said that when you define accredited investors, registered advisors or people involved in the distribution of complex financial products, if they have qualified under certain examinations or they are regulated by the regulator, then such professionals and such people should also be treated as accredited investors.
Right.
Yeah, because then what happens is that the two things. One is you are again going back to the other aspect of having money but not enough understanding, and therefore only having money is not necessarily the only condition. That's the larger point. And here we are talking about, okay, we may not be ourselves having millions as net worth or crores as annual income, but my understanding of the complexities of a financial product is such that I will be able to decipher this should it come to me. And so I should have access to this product. I should have access to this information. And I should not be getting to know this through my clients who are being sent something, and I just rely on my clients to get this information about the product. That's a very important point that we should all make. Whether we are SEBI registered advisors, whether we are insurance agents, top of the table, court of the table, whether we are audited mutual fund distributors as well who come under SEBI due diligence. If we have reached a certain level of sophistication, understanding, and regulatory supervision or quasi-regulatory supervision in India, it's a very interesting point to make and see what the regulator has to think.
Yeah, I think that's a great point, Rajesh. And I think if there are no more questions, maybe it's a good time to conclude our discussions for today. Thank you very much, Honmeng, for taking out the time and sharing your insights. We all feel a lot more, I would say, satisfied or less jittery and less jumpy when we say, oh, somebody else has already experienced this, and maybe there is some truth in terms of the way the regulation is getting framed. So thank you very much, and it was my pleasure to get to know you today, and hopefully we'll be in touch going forward. Rajesh, thank you once again for not only your insights, which came from your experience or new experience in FPSB, but also your previous experiences, which have been, again, very, very useful. And to your team and the team who helped put this together and organize this, thanks a lot. Rajesh, if you have any sort of final words, I will give the floor to you to close.
Thanks, Loa. You have done everything that you needed to. I just wanted to thank everybody out there who are watching us on YouTube streaming. We've had a lot of participation coming in as questions. In fact, our friends here have been wiring that back to us, all the questions that were happening on YouTube. So it's great to see participation. Not just that, I also wanted to wish the very best to Arya and the team at Arya, because I think only when the community keeps talking and keeps engaged with multiple participants in the industry do we all grow in our knowledge and understanding. So this is great as well. So it's a first for us here in India after at least I have taken charge in Feb. So it's a great feeling. Thank you so much for the opportunity, Loa. Honmeng, and thanks a
Okay.
lot.
Thank you. Thank you.
Thank you, Anmeng. Yeah. Bye-bye.
Bye bye.